Uh-huh.
because it may lead to bigger problems.
I see. So,
But not all the time IRS is correct. Remember that.
mm-hmm.
And they make mistakes, although in most cases they are right.
So, Danny, do you usually represent a client? Let's say they don't want to appear personally, the client, but you can represent them.
That's right. And I really, it is recommended that if a taxpayer is summoned, is summoned by the IRS for an audit, it is advisable that the taxpayer hire somebody to represent them before the IRS, because the representative would be cautious and be choosy with his words or her words in representing the taxpayer. Sometimes, if confronted, the taxpayer may just say things.
Mm-hmm.
There'll be a lot of things. So,
That's right.
the taxpayer's representative can say, if asked by an IRS and he or she's not sure of the answer, he could always say, well, I'm not so sure of this. I'll talk to my client and I'll get back to you.
Mm-hmm.
You
Mm-hmm.
have a, what do you call that, a cop out somehow.
Right, that's right. Yes. Now, Danny, a lot of people, even though the interest rate has gone up a little bit, still plan to buy their first home or perhaps sell their old home and buy a new home. Are there any important things that you would like to remind people that sell their homes in terms of filing income tax returns?
When they sell their home, of course, yeah, as I told you before, those are permanent documents that they should keep in their files. When as they relate to the sale or purchase of a home. Uh, so because IRS will, if audited, will ask for these documents.
Right. And selling your home, sometimes you can really pay a lot of taxes, correct? Especially if you have
Yeah,
a lot
yeah,
of profit.
yeah. Oh, yeah. Because the exemption is still there. I mean, if husband and wife sell their home, there's an exemption of 500,000 that they could be exempted from taxation. In other words, for example, in 1980 they bought a home for let's say 100,000, and then they sell that in 2015 for let's say 600,000. So they would make 500,000. That 500,000 is exempted from taxation, but there are certain qualifications to do that. But it's not difficult to qualify.
Mm-hmm. By the way, when you said dependent, they cannot be from outside of the country. But what about an individual living with a family who is a dependent but is over 21 years old? Is that considered a dependent?
Yeah, as long as support to the individual is given by the person claiming him or her as a dependent um, for more than 50% of his or her support, that's okay.
Mm-hmm. Now, what do you advise clients to present or to bring when they visit with you? What particular things do you need? I'm sure sometimes you find clients bringing a big basket of receipts, correct?
Yeah, that's advisable because, for example, if you bring a box of receipts, and that would take time for the tax preparer to go through those receipts, and that time will be charged to him or her, the taxpayer.
Oh,
So it will be much better for the taxpayer to prepare or make them in orderly fashion, so that the taxpayer could really ascertain what to include in her or his return, so that the fee may be less than it should be. Yeah.
so regular receipts, you buy food in the supermarket or maybe you go to a store to buy things for the house. Those are not important.
They are not important in the sense that they are not deductible. Those are living
Uh-huh.
expenses. Food, if you don't use that in business, anything personal is not deductible. Only business-related expenses.
Mm-hmm. Now, things that are very important for us to cover with Danny